Nigeria External Reserve climbed to $42.03 billion on September 19, 2025, marking the highest level since late September 2019 and setting its six-year peak. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okeri. The latest data from the Central Bank of Nigeria as of Monday shows that reserves at $42.03 billion, up from $41.99 billion the previous day and well above $41.42 billion at the start of September. The last time reserves were higher was on September 26, 2019, when they stood at $42.05 billion. The latest figure extends a sustained rally that began in July and has gained speed this month. The new high is significant for market confidence, boosting Nigerian import cover and the central bank policy's credibility. It is observed that the build-up is not one-off spike. Throughout September, every recorded session has shown an increase, delivering 13 consecutive daily gain across 14 reporting days. From start of September to 19th, reserves have grown by $610.6 million, that is 1.47%. Accretion has been steady, averaging about $47 million per reporting day. The second half of the month have been particularly strong. On September 8th, reserves stood at $41.5711 billion. By September 19th, they had risen by $461.8 million. In the span of 4 business days between September 15 and 19, reserve added almost $583.0 million, a reflection of more robust FX inflow and restrained outflows compared with August 29, when the balance was $41.3055 billion. Reserves are now stronger by $727.3 million, that is 1.76% increase. Reserves are also in positive territory of 2025. They have risen by $1.15 billion, that is 2.83% from $40.8780 billion at the end of September 2024 to $42.0329 billion in mid-September 2025. The trajectory was not smooth, with a sharp decline in the first half of the year, dragging reserve to a low of $37.180 billion on July 3rd, 2025. Since then, the stock has recovered by $4.85 billion, that is 13.05%. The September peak is now the highest point of the year, surpassing all prior 2025 reading and reversing earlier losses. This implies that the return of the reserve above $42 billion strengthens the CBN capacity to smooth volatility in the FX markets and meet external obligation with greater credibility. It also raises Nigerian import cover, a key metric tracked by investors, lenders, and rating agencies. The 6-year high provides a physical boost that may help encourage portfolio inflow into local assets, provided yields remain attractive and policy directions stay consistent. Sustaining reserve at above $42 billion requires a steady pipeline of FX supply from crude oil sales, non-oil export, diaspora remittance, and foreign portfolio investment. Any slump in oil production, fall in global price, or resurgence of demand pressure could stall the gain. On the other hand, further improvements in production volume, transparent FX operation, and consistent fiscal monetary coordination could consolidate the milestone and possibly push reserve above late 2029 level. In essence, September has flipped the 2025 reserve story from weakness to strength. The test is now whether the momentum can carry through the fourth quarter and provide lasting stability of Nigerian currency and external sector. The Nigerian Bureau of Statistics says Nigeria recorded 4.23% gross domestic product growth in the second quarter of 2025 from 3.13% in the first quarter of 2025. This represents a 1.1% quarter-on-quarter increase. In the GDP report for the second quarter of 2025, National Bureau of Statistics says following the rebasing of the gross domestic product using 2019 as the base year, previous quarter GDP estimates a benchmark to the rebased annual estimate to align the old series with the new rebased estimate. This procedure provides a new quarterly GDP series which, compared to the second quarter estimate, this growth rate is higher than 3.48% recorded in the second quarter of 2024. During the quarter under review, agriculture grew by 2.82%, an improvement from 2.2% recorded in the corresponding period of 2024. The growth of the industry sector stood at 7.45% from 3.72% recorded in the second quarter of 2024, while the service sector recorded a growth of 3.94% from 3.83% in the same quarter of 2024. In terms of shares of GDP, the industry sector contributed more to the aggregate GDP in the second quarter of 2025 at 17.31% compared to the corresponding quarter of 2024 at 16.79%. The report further shows that the oil sector contributed 4.05% to the GDP in the second quarter of 2025, while the non-oil sector contributed stood at 95.95%. The real growth of the oil sector was 20.46% year-on-year in the second quarter, indicating an increase of 10.38 percentage points relative to the rate recorded in the corresponding period of 2024, which is 10.08%. On the non-oil sector, NBS says the non-oil sector grew by 3.46% in real terms during the reference quarter. This rate was higher by 0.38 percentage points compared to the rate recorded in the same quarter of 2024, which was 3.26% and higher than the 3.19% recorded in the first quarter of 2025. This sector was driven in second quarter of 2025 mainly by agriculture, information, communication technology, telecommunication, real estate, financial and insurance, trade, construction and electricity, gas, steam and as well as air conditioned supply, accounting for positive GDP growth. In the real term, the non-oil sector contributed 95.95% to the nation's GDP in the second quarter of 2025, lower than the share recorded in the second quarter of 2024, which was 96.49%, and lower than the first quarter of 2025, recorded at 96.03%. Nigeria imported textile article worth 565.96 billion naira in the first quarter of 2025, according to the latest figure from the National Bureau of Statistics. This sharp rise has alarmed industry stakeholders, who warns that unchecked importation continues to cripple local textile manufacturing and erode jobs in the sector. The figure shows that Textile imports jumped by 56.6% year-on-year compared to 361.39 billion naira recorded in the first half of 2024. In the second quarter alone, textile worth 337.12 billion naira entered the country, and 84.27% rise from 182.95 billion naira in the same period of 2024. The surge built on previous trends. In 2024, Nigeria imported 726.18 billion naira worth of textile, almost doubling 377.47 billion naira recorded in 2023. Despite government promise of reform under the Cotton Textile Garment Program, import dependence shows no sign of abating. In April, the Federal Ministry of Industry, Trade and Investment announced an initiative to localize up to $4 billion in spending on textile import, fostering economic growth, creating jobs, as well as boosting local manufacturing capabilities. The Minister of State for Industry, Trade and Investment, John Enoh, says the government planned a national campaign to promote locally made garments across ministries, departments and agencies, citing Ogun State as a model. The government also pledged to work with the Bank of Industry to provide financing and machinery for textile firms. By August, officials began site visits in Kaduna as part of revival plan. Yet, with importation soaring, stakeholders argue that progress has been far slower than expected. The Nigerian Upstream Petroleum Regulatory Commission has reported a revenue shortfall of 459.6 billion naira against its August 2025 budgetary target of 1.2 trillion naira after remitting 745 billion naira to the Federation account. In its reports to the Federation Account Allocation Committee for September 2025, the Commission disclosed that its revenue collection stood at 745.21 billion naira in August, representing 61.85% performance against the month's budget benchmark of 1.204 trillion naira. On a month-on-month basis, the remittance reflected a 3.05% increase from 723.17 billion naira recorded in July. The report noted that the total collection increased by 22.04 billion naira, equivalent to 3.05% when compared with July 2025. The increase in collection for the month of August 2025 can be attributed to a revenue drive that led to improvement in almost all the revenue heads. An analysis of the submission, however, shows that the underperformance was driven largely by poor royalty inflow from oil and gas, while the month's budget projected 1.144 trillion naira from royalties. Only 682.28 billion naira was realized in August, leaving a gap of 461.89 billion naira so far. NUPRC says it has transferred 5.475 trillion naira through the Central Bank of Nigeria to the Federation account between January and August 2025. It added that the Commission performance from January to August 2025 is 7.103 trillion naira, inclusive of NNPC Limited JV and PSC royalty receivable of 1.050 trillion naira for the period, as well as Project Gazelle receipt of 730.24 billion naira for November 2024. From January, March to June 2025, 2 days earlier, NUPRC reported that the sector recorded an average daily production of 1.62 million barrels of crude oil and condensate in August 2025, up from 1.58 million barrels per day in August 2024. The Commission Crude Oil and Condensate Production Report for August 2025 indicates that crude oil output stood at 1.43 million barrels per day, a 5.47% increase from 1.36 million barrels per day produced in August last year. Condensate production, however, fell by 192,229 barrels per day from 220,435 barrels per day in August 2024. It noted that Nigeria August crude oil production represented 96% of its OPEC quota of 1.5 million barrels per day, reflecting the country's improving capacity to meet output targets. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government's policies. Controller Oluwadare Oshoba, Custom Area Controller of Apapa Port Command, has called on port users and stakeholders to prepare for a more seamless trade process as the Nigerian Customs Service advances its modernization project with the commencement of the fixed scanner installations. With the installation of fixed scanner now underway at Apapa Port, the Nigerian Customs Service has taken another major step in its modernization drive, as Comptroller Oluwadare Oshoba, who oversees the Apapa Command, assures port users and stakeholders that the development will translate into faster and more efficient trade process. In a statement signed by Tunde Ayagbalo, Public Relations Officer of the Apapa Area Command, the Custom Area Command, Oluwadare Oshoba disclosed this shortly after inspecting the location for the installation of 3 new scanners at the port. Says the command is ready to surpass expectation, as the scanner would examine 200 containers per hour, while describing the location for scanner as an operation master stroke. The Custom Area Command says no consignment will escape high-tech driven, no intrusive inspection at Apapa Port, as the scanner will be strategically positioned close to the berthing area. The Nigerian Exchange opened the week on a bearish note, as Nigerian breweries and major stock dragged the market to $220 billion loss on Monday. The downturn reflected weak investor sentiment in the consumers and industrial goods sector. At the close of trading, the market capitalization fell at 89.5 trillion naira from 89.72 trillion naira on Friday, while the all share index shed 347.12 points, that is 0.24%, to close at 498.20 points. This represents a 1-week loss of 0.11%, despite a 4-week gain of 0.35% and a year-to-date growth of 37.48%. A total of 488.5 million naira shares, valued at 13.71 billion naira, were exchanged in 28,598 deals. This marks a 13% improvement in volume, a 2% improvement in turnover, and 18% rise in the number of deals compared with the previous trading session. A total of 125 listed equity participated in trading, ending at 22 gainers and 28 losers. Royal Exchange led the gainer with a 9.8% increase to close at 2.24 naira per share. Secure Electronic Technology rose to 6.67% to 0.80 naira per share. Chance gained 0.13% to close at 3.29 naira, and Prestige Assurance appreciated by 5.75% to 1.84 naira, while Dark Communication added 5.66% to close at 1.12%, 1.12 naira per share. On the losing side, Nicole topped the chart with 10% decline to close at 3.33 per share. Ikeja Hotel followed a loss of 9.8% to close at 20.70 naira. FTN Cocoa Processor shed 8.33% to 5.50 naira. Nigeria Brewery fell to 7.64% to 70.15 naira, while Honeywell Flour Mill dropped to 6.79% to 20.60 naira per share. Sectoral performance shows mixed results. The premium index gained 0.02%, while the NGX industrial index remained flat. However, insurance index dropped to 0.08%, the NGX banking index shed 0.25%, and the main board index declined by 0.39%. Alright, this is where we draw the curtain on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Terrestrial Star Times. To stay connected, kindly follow us on all our social media platforms at Global TNG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.